So, like I said, if you're looking for a stochastic crossover when your Ashimoku is at oversold or overbought area, depending on where the Ashimoku is lined up. When the Ashimoku line is showing you where the momentum, where the market is, and it's telling you the next move of the market. You understand? If the Ashimoku is at this oversold area, you'll be looking for a stochastic crossover that is at the oversold area, like this one here, this one, stochastic crossover. That's what you'll be looking for to place your trade because of where Ishimoku is. Because of the Ishimoku is at the oversold area. You understand? Ishimoku is at the oversold area. Then see if you place some entered here, this stochastic crossover here, you would have made this profit. Stochastic crossover here would have made this profit. Stochastic crossover here, you would have made this profit. This one I'm telling you now, this is intraday trading, like intraday trading, 2 3 hours, 4 hours in and out of the market. You get. So, and going forward, we have also this when the Shimoku is at over bought area, you're looking for a stochastic crossover here. You understand, to enter your trade, stochastic crossover there, stochastic crossover, and would have made this profit. The Shimoku, no, the Shimoku is still above, coming down. You understand? Coming below. So this is another stochastic crossover that you will still enter, since it is the Ishimoku is above the stochastic. You enter it and then come down with it as well. So that is, and then when you now notice that that there is, when I notice there is let me go more. When I know that exactly here as well, you see things like this. Ashimoku lined up, and then you see stochastic crossover. You understand? You should place your trade, enter a sell trade. And how you enter your sell is that there should be the first candle should open and close in bearish before you now enter in the second candlestick, and place your stop loss above the previous candle that you entered. Wait for the first candle before you enter any trade like this. You have to wait for the first candle to open and close in bearish, since it's a bearish position you want to enter, since you want to sell, as it is a sell setup. Wait for the first bearish candle to open and close bearish before you enter the next candle, opening candle, and then hold your trade, and then place your stop loss above the first bearish candle that opened and closed bearish. That's how you trade, and obviously take your profit before it gets crossover, before the stochastic crossover there. Once you start seeing a weakness like this, you know it's time for you to get out of the market. Rejections like this, like this price action, doji and shooting fly and all those hammers and all that, you know it's time for you to get out of there for the time being. And that is that. And also, as well as please pay attention to all this thing I'm saying, because it's what's happening out there. It happens out there a lot. It happens out there every time, all the time. We see a lot of stochastic crossovers, and a lot. Another thing I want to teach is about another entry method is about the MACD. About the MACD. The MACD that is in this strategy. The MACD. Take note, whenever you see that the MACD, this bottom side is flat, and then the candles are pointing upward. The MACD candles are pointing upward. The MACD candles are pointing upward. The MACD sticks, they are all pointing upward. They are making um, a valley like a structure, things like something like that. But the main thing is that they are pointing upward. That direction shows that that's the direction, or that's the direction where the market is heading to. You understand? Is heading to. Even when there is Shimoku, is making the line up like this. It's telling the market is up, as in this line, this Ishimoku line here is trying to tell you that the sellers are starting to enter the market. You understand? Even when this MACD is still showing up, which is giving a bullish sensation, a bullish power. There is Shimoku up here. If the Shimoku gotten to overbought area, it's telling you that. So when you see the Shimoku make a line above, and then you see a stochastic crossover below, that means you have two chances of trading. You can trade both to the bullish and to the bearish. But the way to trade this to the bullish and to the bearish is that, note, we have two direction here. Ashimoku is above, insinuating that the sellers are entering the market. The sellers is about to take over the market. You understand? The market is about to drop to sell. Meanwhile, the MACD is pointing upward, telling you that this market is still bullish. You have a bullish insinuation. You have also a selling insinuation. But the thing we should look at for more in situation like this is that you watch out more for selling, for bearish, for the market going bearish. But you will not enter your bullish position carefully, but you enter, be more inclined to bearish position, bearish setups. You also use the same tactics, the same method of entry, the same entry method. Make sure that the MACD sticks are strong. They are above this level 50, whether it is pointing from up downward, whether it's pointing from downward up. It's above this level 50. You understand? So when you see a situation like that, you see situation like that, you see this. When you see a stochastic crossover, the first candle has to open and close in bearish. You now enter the second candle. You enter a position here. When you enter, you hold. You understand? You place your stop loss below the previous candle and then hold it and wait for the market to move. When you get to overbought, 2 3 hours, 2 3 hours, 3 hours, you take your profit and go get out of there. You see another, and coming down, you see like you see a first bearish candle, which is this. You enter here, set your stop loss above here, and you go down with it, take your profits. You enter again, going up here. You see the first bullish candle. You enter, put your profit below the previous candle, and then hold the trade. Because of the MACD is going up, you follow it up and take your profit. And then you see this one here now, this crossover here. You see this first open bearish candle. You have to enter your trade in the next candle, which is this candle, which is here, somewhere around here. Yes, and then you place your stop loss here. You place your stop loss above here, and then you hold the market. This is why you need to place your stop loss. If it reverses, it will hit your stop loss and put you at a little profit. If it goes down, you make maximum profit. You understand? So like that, that's how we go about this trading. It occurs everywhere, every time. The next one I want to show you now, which is very strong one that hardly, I should say, it never fails. It is always, it always works out. This one never fails. I'll give it like 99.9% assurance that whenever you see a position, a setup like that, you should enter your trade, because it always goes, it always enters, it always moves to that direction. Except for a reason. I'll show you the reason why it will not move, but it always moves. Let me show you now. See this one here. When you see a MACD crossover, as in a MACD, let me say, transition from pointing downward to pointing upward. When you see the transition, this transition here, I call it transition from pointing downward to pointing upward. This transition is where the trend is changing hand. A downtrend is changing hand with the uptrend. That's how I say it. So when you see a transition like that, you wait for your stochastic to go and come back. When your stochastic go come back, and then you have a stochastic crossover. If you now have a stochastic crossover, if you enter your trade, let's say a buy there, it always returns and go back up. The market has transited. You see this down coming here, it comes down. This move here, this move that you see here hardly fails. It hardly fails. It always goes, it always moves. When you see a move like that, you see a MACD transition, and you come now and say stochastic went up, ignore this up, don't follow it. Only you're looking for a buy, because this is up power, this is down power. Because it is up, because it is up power, you're now looking for a buy setup, a stochastic crossover that is going for a buy. That's where you see, that's where you enter. When you enter it, it never fails, it hardly fails. It's just everywhere. If you see it anyway, you see a things like that, it's always moving. Rarely, before it rarely fails. See crossover, and this crossover, it goes down. It hardly before you see it failing. You see a transition, a crossover, and you see it will go up. To always give you good profit. See transition, stochastic crossover, it goes down, it will go down. To always give you good profit. Good profit, good profit, good profit, good profit. It always gives good profit. Anywhere you see it, you enter it. Anywhere you see it, you enter it. Enter it very well. It will give you, you make good money here. See this one here, like this, and it went up, give you a profit. Of course, follow the same pattern. Wait for the first candle to open and close bullish, and then enter the next candle. Whichever way. See transition, MACD transition, stochastic crossover, and the market went down. First candle open, enter the next candle here, place your stop loss above here and hold it. You understand? So it happens everywhere. You see this one here, that it goes if you be able to, because of the Ishimoku has gone down here. Also this Ishimoku, because of this Ishimoku here now, this Ishimoku you're seeing here, this Ishimoku you're seeing here, this Ishimoku you're seeing here now, it was down here, but because of Ishimoku, yeah, it's always changing. That's why you think it is the way is where it is now. But if I drag the screen, back here, you see that Shimoku was down. You understand? So if it's down like that, you know that this is a go for you. You understand? It's a go. Either first bullish candle, enter, place your stop loss, enter your position and give you profit. Or better still, if I enter this first bullish candle, as you can hold the market. This one here is a go, first bearish, enter it, go take your stop loss, follow the market, come back up, make your profits. You understand? So my brothers and sisters, now I told you I'll show you why the market might not make that move. Obviously, the last Euro USD, last Friday in Euro USD here, it's, you see, we saw a MACD crossover, a stochastic down crossover. So I said MACD, we saw a MACD transition from this is downward to upward, from bearish to bullish. So in that sense, now see this uh, um, stochastic crossover here. The first candle will open and close in bullish. Sorry, because it's from oversold area. First candle close in bullish, then enter the second candle, enter your position here, place your stop loss here, and then when it gets here, before it gets to another crossover up, you've taken your profit, and now as I said, when there is Ashimoku, when the Ashimoku is above like this, you should enter your trade. Then it says stochastic crossover, you enter a trade there. You should place a trade, which is a sell. This is sell setup. Um, uh, Accordingly, it's a sell setup. So you're supposed to enter a sell position here. But why you should not enter a sell position here, regardless the Ashimoku area, is because of 4 hours time frame. Let's check what's happening on the 4 hours time frame. The higher time frame usually have a higher perspective, or usually have an overall, or should I say an overriding um, authority over the smaller time frame in most cases, if not in all cases. Now let's go to 4 hours time frame and see what happened in 4 hours time frame. 4 hours time frame. You see now in 4 hours time frame, the Ishimoku is below here coming up, and you've had the same crossover here, crossovers here. Yeah, we had the same crossover here, crossover here, crossover here, crossover here, and crossover here. So in have the same crossovers here, and now because of the Ashimoku is downward here, is going up, is going up. That's the reason why we should not wait for that sell in the 1 hour time frame. You shouldn't enter that sell because in 4 hours time frame is telling us that the market is about to change bullish. It's a bullish trend. There's a chance that this week, Monday, Tuesday, Wednesday, the market, this Euro USD will go all the way bullish, will go steadily bullish for a while before it comes down. And then that this stochastic now might come down here and do a crossover and give you a crossover that has to make this one now. Maybe the chart will now come here and go up and go upward. You understand? So that's why in that 1 hour time frame you would not sell it because of 4 hours time frame is giving the opposite question. Well, but secondly, in the other hand, this 4 hours time frame, this stochastic might maybe come down a little bit more before going up. That means this one will come down a little bit more here before going up, which would make which will give room for the 1 hour time frame, which will give room for this stochastic to come down a little bit before going upward. Give this one come down a little bit before going upward. So that is that for that. Please need to be very very attentive, understand what I've taught you, and try to see how you can put it to practice. Don't just rush up with it and start going live with it and all that. Trade it, practice it in your demo account for at least a week or two. Master it before going live with it. In all your entries, please always remember, I repeat, always remember to wait for the second candle. Wait in a crossover. Wait for the first candle to close. If you're entering a sell, to close bearish before you enter the second candle. Place your stop loss above the previous entry point. This is your entry position. You understand? When this when the first candle closes in profit, when the first candle closes in profit, you might bring your stop loss that is here, bring it below a little bit below the entry point, or put it at break even, so that you would be relaxed. You understand? Because in most cases the market don't always go back to that point of the first opening closing candle. It usually don't go back there in some cases, or usually, let me just say in most cases. So always take note of that. But just, or it's better you say allow your stop loss to be where it was before and hold the market to go down before you take your profit at the stochastic crossbar in the other end of the market. The same thing as in the other way. Wait for the first candle to close in bullish before you enter. Before you enter, you take your before you make first candle to close in bullish before you enter your trade. Stop loss. You understand? Take profit would always be when you see your previous arrow. You might put your take profits here because of, you see this fractals, this pointing arrow pointing is is fractals. It tells you where the previous level of the market is, so you can use it to place a take profit at any point in time. You can use it to place your take profit one, use it to place your take profit two. You understand? This use to place your take profit three, use it to place your take profits. Because if you watch it, after this market went up, it came down, went up, came on, went up, it hits all the take profits. So that is how you should know where to place your, what you should use to know where to place your take profits, and know how to place your stop losses as well. Please be guided in all this. Don't just enter the market blindly without um not knowing what to do. Alright, so don't always forget, please always remember, wait for the first candle to close. Always wait for the first candle to close bearish before entering. Enter the next candle. This is an entry position, stop loss here, and then take profit. This take profit one, this could be take profit one, this one will be take profit two. You understand? If you check the, if I scroll left now, you see other fractal arrows that you can use to place your take profit, 3 or 4 5, depending on how far you want to take it. All right, please be guided in this thing. Don't just do things anyhow. Well, that's that for that. If you have any question, you can ask. This for people that have this strategy. This for the people that have this, that already have this strategy. Please indicate, ask me questions, and then I'll private chat you and give you more clarity to how best to use this strategy to be more profitable. And also, you can study it by your own self. You understand? You can be more creative with the strategy to make more profit for yourself. Be more creative with the strategy. You can study it and even understand the strategy even more than I do. It's very possible. So just calm down, take your time and study strategy, understand it, and use it more advantageous to yourself and to other people around you, to other traders. And even you can even throw more light and enlighten me more about the strategy. It's a very simple understanding strategy. So thank you very much. I really appreciate you for having time to listen and to watch this video to this very time. God bless you, and God do you good. You find favor in forex trading. You make more profit than you can ever imagine. You make more profit that other forex traders will have to look for you to tap from your grace. Be blessed and remain blessed, and make more profit in forex trading. Excess profit to you. Thank you and God bless you. Still your man, Mr. Augustus Emeka, ABBA FOREX. Bye.